Low promoted markets, this is Aurora, and I will be with you with the global economic outlook in the week ahead, which is going to be the week number 17 in 2025. As always, let's first have a short review on what happened previous week. Previous week mostly was about the central banks meetings, especially in Europe, Eurozone, and also trade talks and a trade war, which was going on still. And now we know that some officials from China, from Japan and United Kingdom, they went to the United States and talking about the trade tensions and how they can solve it. So we will probably have some news which lifted the gold to sell off in the Friday, not the sell off to lose some of its gains on Friday trades. Anyhow, previous week central bank in Eurozone cut the interest rates by 25 basis point as it was in line with expectations because we know that the Eurozone inflation is lowering while the economic activity is also decreasing. In Canada, also central bank had a meeting, but they hold the rates steady at 2.75%. It was also in line with expectation as there are, we know that the Canadian central bank has been cutting the rates for seven or six straight meetings. So that was to see. I mean, that was because of to see, wait and see how can it affect these previous decisions in the market. So then the central bank in Canada will decide what to do. But currently, 2.75 basis point interest rate is means sounds like it sounds like just logical rates for now. On the other side, we had some economic activity, some economic data from China, which shows that the GDP increased much better in the first quarter, 5.4%, and industrial production as well, while the export also increased more than 11%, which means shows actually that many countries, especially the United States, they import more Chinese goods before tariffs affected imports. In China, in United States also, we had retail sales data showed increase much better than expectations, and generally the data and production side was better, but consumer sentiment fell, which we know that in Michigan University surveys we had lower consumer sentiment, and it shows that the people they are while the inflation expectation increased to more than 3.6%, which means that the people they are worried about the results of the current trade tensions and geopolitical activities or geopolitical tensions that we have. In the weekend, we had a trade talks between the China officials, Japanese officials, and United Kingdom officials with the Americans. We have to wait and see what's going to happen. On the geopolitical side, we know that the United States warned the Russian and Ukrainian that if they do not reach any peace agreement during next days, the United States will avoid being the peacemaker between these two countries. So so we have to wait and see what's going to happen. Finally, I mean, the result of this ongoing peace talks between the Russian and Ukrainian. We know that the Ukrainian economic minister they signed some agreements with with Americans, Secretary of Economy. We have to wait and see what was the exact tone. I mean, the text of this or agreement. We know generally that the United States want to take over the Ukrainian cause because of this, just to cover some of its costs that they had during this war with the Russian. They spend the money that they spend there. But at the same time, the Ukrainian they were asking some guarantees, some military guarantees, but the United States they told that we are not going to give this guarantee. So we have to wait and see what was the exact agreement. So then we have to see. Then we will know that it was including this military insurance or not, or it was not this guarantee. It's not including these guarantees. Generally, that was the geopolitical tension and trade war moving the markets. While on the earnings front, we had too many earnings, more with almost 12% of S&P 500 list. They already published their reports. We had 71% win rate, lower than 77%. 77% historical rates that we win rate that we have. But still, this week we will have more numbers, especially the tech giant, they're gonna increase. They're gonna publish their reports, especially from the Google and Tesla. We have to wait and see what's gonna happen. But in the week ahead, trade war plus these earnings report, they're going to move the market, they're going to move the stock market actually more than everything. Besides that, we have in the economic calendar, we're going to have a very light week. On one day, we will have a central bank meeting in China, where we expect to see that the Chinese Central Bank, People Bank of China, to hold the rates for 1 year and 5 years, interest rate at 3.1 and 3.6%, no change, but they're going to change the reserve ratio probably to support the economy, slowing economy. In on Thursday or probably on Thursday or Friday also, we're going to have the central bank meeting in Russia, where we expect to see that the Reserve Bank of Russia also to hold the rates at 21%. Later this week in United, let's start with United States. As mentioned, in United States, we're gonna have the light week. How several interesting, important data we're gonna have. New and existing home sales. New home sales supposed to increase slightly in United States as mortgage rates slowly decrease to 6.7%. That can support the new home sales, but it's not enough to support the existing home sales, and we expect to see the existing home sales to slow down a little bit in March. At the same time, we're gonna have existing home sales data we're gonna have on Thursday. On Thursday, we still, besides always Thursday that we have the labor market data, we will have the durable goods orders as well, where we expect to see slower. The headline durable goods orders gonna increase by 1.8%, but excluding, that's important, excluding transportation, we're gonna have 0.1% decline in durable goods orders, which means that the retail sales can see some can face some challenges in the next weeks, as mentioned earlier, the consumer sentiment slightly decreased, and interest rate, not interest, inflation expectation increased to 3.6%. That means that the Americans, they're going to be more cautious about how they're going to spend their money. That's the most important data we're going to have. But on Wednesday, that's the Wednesday, very important day in the global market this week. Wednesday is the day where we're going to have the Purchasing Managers Index, or PMI, numbers from most developed and developing economies. In Europe, we expect to see both manufacturing and service sector to slightly decrease. In Japan, we're going to see most probably the manufacturing sector slightly increase, but the service sector going to face some challenges. The same data probably we're going to have in United States. Manufacturing sector going to slightly increase, but service sector can fall slightly, less than 54. Generally, the data will shows that the economic activity is slightly moving lower in most developed economies, but in United States, most probably the manufacturing sector slightly can increase, as the trade tensions or tariffs will help this American production. Will support the American manufacturing sector to make more production in United States. So probably that's why we expect to see slightly improvement in manufacturing sector. In United States, that's the data that I mentioned. They are the most important data we expect to see. Out of the United States, we're going to have important data in Japan and United Kingdom. In United Kingdom on Friday, especially, we're going to have the retail sales numbers, where we expect to see lower retail sales in March, in line with the lower or weaker PMI numbers, which means that the British Central Bank can continue rate cut in its next meeting. In Japan, on the other hand, we're going to see the inflation data, Tokyo inflation numbers, where we expect to see the headline inflation to stay unchanged at 2.4%, which means which can actually support the comments from BOJ Governor Mr. Ueda, where he told that central bank in Japan can continue its rate hike, and we probably see the interest rate around 1% at the year 2025 in Japan. That's these numbers, they are going to be the most important data which we're going to have the next week. And now let's check the charts and see what we're going to have in the charts. In charts, if we check the charts, we can see US dollar index slightly continuing its downtrend, while we can see RSI as moving higher from oversold area, while the OBV also confirms this correction. So which means that while the overall downtrend still in the market still continues and remains bearish, the US dollar index, but still we have a chance of correction towards 101. 101 can be the very important pivot if we see if the US dollar index can move higher than above 101. We can say that the trend can change in the short term, but holding the 101 under trading or trading under 101 can continue this downtrend, and we can expect lower digits later as well. This weaker US dollar supported the gold, while the other factors such as geopolitical tensions, such as trade war and demand for safe haven, supported the gold demand, and the gold price printed the new higher high always in the previous weeks. Now we expect some correction as the US dollar index can also increase slightly. We expect some correction, but this correction doesn't mean the trend change, because the overall uptrend can continue still further. In energy market, oil price slightly increased after new sanction against Iranian oil market against some Chinese manufacturers that they were buying the Iranian oil, and also lower production in the United States and some lower production in the United States and also Venezuela. Lower production in the United States and Venezuela. They supported the oil price to slightly increase, but still is. The oil price moved above 50% of its Fibonacci level from previous recent fall that it had, but still it's trading under 61.8%. If the price moves above $65.70, which is the 61.80% of its Fibonacci. If the price moves above $65.70, then we can expect the higher digits. But otherwise, the oil price still can continue its downtrend. But moving above 65 or almost $66, we can say that the above $66 trend can change for the short term. And for the short term, because in overall or in a bigger picture, this trade war and trade tensions can slow the global economy and demand for energy as well. On the stock market, mostly till now, the stock market heated by trade tensions, but for now, for next 2 weeks, we're going to have too many important earnings. The market investors also, they will continue focusing on the earnings reports, as very important companies such as Alphabet or Google and Tesla, especially this week, they're going to publish their earnings. So too many important companies still there. We have only 12% of the S&P 500 list that they publish their reports. So generally, what we can expect in the market, that the market can be, can be moved or can be affected by these earnings reports. Generally, we expect to see slightly better than expected earnings. So far, we have 71%. It's lower than historical 77%, but still it's fine, and we can say that above 70%. Being rated in S&P 500 can be the acceptable result, but generally the earnings that the company they were better than expectations, but overall surprise or positive surprise around 6% is weak. Still, we have lower. If the companies they had some benefits, these general benefits that they had and better than expectations, still it was lower than their historical benefits and income that they had, the net income that they had. So generally, that's why we totally expect that. Generally, we expect that the overall downtrend to continue. Still, we are not changing our perspective on the stock market. So S&P 500 can continue with the initial resistance at 5,480 and initial support at 5,230. Falling under 5,230 can continue this downtrend further. correction about 5,480 can support the short-term correction, but general idea of downtrend cannot change for now. In the cryptocurrency market, Bitcoin is moving above its downtrend channel, but this downtrend channel moving above downtrend channel doesn't mean the trend change unless if the price moves towards $87,000 and then $92,000. Any trade or holding the price under $92,000 or 92K can hold this overall downtrend. Any price change need to move further above $92,000. But general right now, still we are negative about the Bitcoin price, and overall downtrend can continue. If the price fell under 80,000, then we can probably go towards October low of 55,000 US dollar. It's dependent if the price can move lower again under 80,000 or not. That was the general market news and our expectations from the next week. If you had any other questions, please don't forget to write down in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye.